Hello friends, welcome to my YouTube channel, Binary Winners Club. My name is Bernard and today I'm having a very important video for you that I would like you to watch and understand from beginning to the end. And I would expect at the end of the video, you provide your comments on what I covered, give your suggestions, give suggested topics to cover later. Now, I decided to do a video on fractal swing highs and swing lows because I've received a bunch of questions from members in our Telegram group, Binary Winners Club again. And the members were asking questions around where do markets reverse from? What are these highs and lows? What people now call market highs and market lows. And I thought I would cover swing highs and swing lows because that's what the questions were describing. And in an attempt to cover these swing highs and swing lows, I decided to make the whole process very objective so that people are able to identify the same swing highs and swing lows as I normally do. Of course, this concept can be applied without using the Fractals indicator. You can do your own analysis of the chart to do swing highs and swing lows, but the fractals can also be fine-tuned to increase their level of use based on user preferences. And so without further ado, we will dive in and see the 4 aspects of working with swing highs and swing lows that I thought could be useful. 1, what are swing highs and swing lows? Number 2, how do we use the Fractals indicator to identify swing highs and swing lows on the chart? And number 3, what is the correct way of drawing swing zones? And finally, what are some of the trade opportunities you can find at swing zones? So members were saying, Bernard, help us understand how to trade with swing highs and swing lows. And this video is meant to achieve just that. So stick around to the end. Do notice that in my algorithm for trading, I apply 4 things. Number 1, I follow the trend. I believe in following the trend. Number 2, I trade at specific market zones or market levels. And location where swing highs and swing lows fall is a vital element in my trading algorithm. Then, of course, you look for signals and confirm your signals, after which you can place a trade. So we will go in and look at these 4 items sequentially. Number 1, what are swing highs and swing lows? If you look at the definition is here, but if you look at the charts, I want to illustrate, to explain this illustration that you see here. What you notice is when we say a swing high is when price makes a high and that high is followed by 2 consecutive lower highs. So you're talking about a high, so a swing high here. You look at this candle's high, right? High price is higher than the next or subsequent or consecutive. So this high followed by this lower high and another lower high and preceded by another lower high and another lower high. So this candle becomes a swing high. I'll repeat, a swing high is the candle preceded by 2 lower high candles and followed or preceded by 2 lower high candles. So it's a candle in the middle of 5 candles. Previous 2 candles are lower than it. The candles after this middle one are also lower than the candle in the middle. So this becomes a swing high point. Similarly, a swing low point is a candle in the middle of 5 candles where the next 2 candles have a higher low and the candles before the middle candle have also a higher low, right? So you should be thinking in that direction, that market is moving up and down in those structures, and you will be able to identify. So I'll illustrate here by drawing manually. The market's going up, right? Going up once again, and then going up again, and then decides from that point, it drops. So that becomes this one. Now that level, this becomes your swing high. How? The previous candles, the previous 2 candles, remember this is the candle we're interested in, the middle one. So the 2 candles before the middle one have a highs, the highs are lower than this high. And the candles that come after the middle one have their highs lower than this one. That becomes a swing high. Now, in a swing low, you would have the exact opposite. All right, market was going down. It can be several candles, but we are considering 5 in this particular case. Okay, this candle can be any color. The middle candle can be any color. Then this one will be followed by candles that look like this. Remember, I'm not even drawing wicks. Okay, these candles might have definitely might have wicks. That's not important for now. This can have wicks. Okay, can have wicks from whichever side. The most important thing is the middle candle here. This middle candle, which is the swing low, is identified as a swing low after all these candles are formed, meaning once we are sure this low is higher than this low is higher than this, we confirm that side. On the left, this low is higher than this, and this low is higher than this becomes a swing low. Okay, so on the chart, on the screenshot that we have, you can confirm that this is a swing low. Why? This is a higher low, right? And this is a higher low. This is a higher low, and this is a higher low. Right, so this one is the wick is the lowest of all of them. So you can draw a zone or a line here. Similarly, when market's going up, it creates a swing high. It's confirmed as a swing high when the previous 2 candles, these ones, have their highs lower than this middle one, and the other 2 candles after the middle one also have their highs lower than the middle candle. So this is a lower high, sorry, a swing low, and this is a swing high. Now, as you see, these are very important market structures. You can actually create a support or a demand supply area from here, a support area or a demand supply area from here. Similarly, you can create a resistance area here or a demand supply area. So particularly, this will be a supply area, this will be a demand area. This could be a resistance area, this could be a support area. Right? This could be a swing low, this could be a swing high. There are many concepts people use in the market. They're not identical, but they're talking about pretty much the same thing. All right. Now we move on and see then how can we identify this? We can identify this manually, as you can see, but we can use fractals also, a very important indicator in identifying these market structures. Now, let's look at using Bill Williams' Fractals indicator, which you find on MetaTrader 4 and many other trading platforms. For example, it gives you an arrow above a candle. When you add this fractal indicator on your chart, it will draw you this kind of dots. I just changed the color. Normally the color is gray or something like that. So if you see the arrow above the candle, this is called a fractal high. This is called a fractal low. Fractal high. Again, we are saying this is the same as swing high. Fractal low is the same as swing low. So you can see clearly that when we talk about this as a fractal high, look at the candles after this. The low is lower than this, and the low is lower than this. The other low is below this, and the other low is below this. That qualifies for a swing low, a swing high, sorry. I'll give you another example of a swing high. This candle here, sorry. This candle over here is another example of a swing high. This one, we have a fractal here telling you this is a swing high candle. Why is it a swing high candle? Because the 2 candles after it have a lower high. Lower high, look at the wick on top. Lower high, look at the wick on top. From before also, lower high, lower high. Okay? Great. Now let's look at a swing low. A swing low would be, for example, you can use this swing low and this one to explain. Why is that considered a swing low? It's a swing low because the candles before it, 2 of them, have their lows above this low. This one is above, this one is above. This one is above, this one is above. So the middle candle is the swing low. Same thing here. This is a swing low because the 2 candles after this, they have their lows above the middle one, and 2 candles before the low, this swing low, have also their lows above this one. So this is a swing low. So when you have the swing lows on your chart, they can become very important support and resistance or demand supply zones. For example, if I picked this fractal and I thought this is an important area, I can draw like that. If I thought after this fractal, this is an important area, I can draw like that. You see price reacting. You see here, from this swing low, something is happening. From this swing low, something is happening. From this swing high, something is happening. So I want now to show you how to correctly draw these zones. Okay, how to correctly draw these zones, so that now you can see trading from them. Okay. Now to draw zones at swing highs and swing lows, there are two steps. Number one, you identify the swing candle. If you're using fractals, that will be the candle with the arrow. If you're using fractals, it will be the candle with the arrow. All right. The candles with the arrows are the swing candles, right? If you are drawing manually, then if you don't use fractals, then you have to identify the candle in the middle of the five, the one with the highest high for a swing high, or the one with the lowest low, which is a swing low. Okay, so that's the candle you're interested in, the swing candle. Then after you have identified your swing candle, step number two simply would be draw a zone ranging from the body to the wick, body to the wick, body to the wick. Now, I've drawn this, but I want to take you back to show you how to also draw this, okay? Let me see if I can go back. We were here, all right. So if I wanted to draw from here, let's say I want to draw this. What you have to do is ensure where we have a swing low like this, you draw a zone between the body of the candles, the bodies of the candles, and the wick. So there are two candles here. Don't cut any candle, just draw it like this and extend your line to the right. Then you can wait for market to come here to think of possibly taking a signal or a trade. Now, this is the body of the candle, and this is the wick with the swing candle. So draw your line like that. You cover the bodies, and you cover inside here. There should be no body of any candle. It should just be the wick only, like that. So then you can anticipate some setup here. We have a narrower. So we start with the body, we go to the wick, extend your zone like this. You can draw it as long as you want. Okay. And here we have this wick. We have the bodies down here. You can start from the wick, you go down to the body. Don't cut anybody, just extend it. All right. Do it like that if you want. For this one, you do the same, body to wick, extend it like that. Now, look at this. All right. Remember, this pattern is only complete when we have 5 candles. I need to explain that here. This pattern is only complete when we have two candles. And if we don't have 2 candles, then we are in another situation that we need to clear. So let me help you understand this. Okay, let me help you understand this. So what you need to do is whenever you see this, and these 2 candles are here, if you want to draw the zone, you can't draw it from here. You can't draw it like this, because then these candles will be inside the zone. Just ensure that for the structure, you only draw the zone. We don't cut candles. So in this case, the structure is complete when you have these 5 candles. These are the 5 candles that forms the swing high here and swing low here. So for the swing high, these are the 5 candles. It means I will draw the zone from here to the body. I don't want anybody in that structure to be part of the zone, just the wicks. I draw it like that. Okay. Otherwise, you will be tempted to draw it like this, and that's very interesting. That is not a correct zone. Okay. It might work, but that's not a correct zone. So that's how you do it. So I'll give you a few more examples. Look at this. So I'll just look at that and I draw around. Sorry, I think I'm using a very big line. Using a very big line. Okay, let me change the color so that I can draw resistance as resistance and support as supports. Okay, so here, body to wick, that becomes here. I'm drawing based on this fractal high. Okay, so that becomes my resistance zone or swing high zone. Same thing here. The highest wick is here and the body. So I'll draw it from the wick to the body and extend my line like that. That becomes a swing high zone. There's a swing low zone here, body to wick. I will do it like this. Okay. Same thing here, body to wicks. I will do it like this. Same thing here, body to wick. I'll do it like this. All right. Here, body to wick. I will do it like this. and extend, all right? Then body to wick, you can extend like this, like this. So that's how you deal with swing highs and swing lows. The swing zones using fractal highs and fractal lows. That's how you draw the zones. I'll give you a better chart that I drew the zones in advance as I was preparing this material. So let's see what that is. Aha, now look at this. So the green zones are support zones. The red zones are resistance zones. These are the swing high zones, swing low zones. All right, I'm drawing red here because normally I would expect the market to go bearish from these zones. I expect the market to go bullish from these zones. And we are accustomed to green for bulls and red for bears, right? So like this one is drawn, this is the swing high candle. So the bodies of the candles are here. So I stretched my line from here to here and I extended. And for the swing low, I picked this swing low candle, body to wick, I extended the line like this. Now, even before we talk about signals, do you see how these are very important elements on your chart? Location, trade location, very important. Because you draw your zone, you only had this part, this candle plus the next two candles, then the fractal is complete. So you draw. You see market came back here, all right? So you had another swing high here. This time it was broken again, market reversed from here, market reversed from here, market reversed from there, and a few breakouts, false breakouts, and market reversed from here nicely. Now, look at this upper one, okay? After you drew this zone, of course, by the time this arrow was forming here, this candle and this candle had completed, okay? Sorry, this candle and this candle had completed. So you draw the zone. You see market came and reversed from this zone, all right? Now there's another zone here. If you drew it from here, based on this swing high with these two candles already done, then market's reversing from here. So you might be asking, and I think that's what members were asking, how do you trade from these zones? I have drawn my resistance zone. I've drawn my support zone. How do I pick a signal or a trade from these zones? We talk about some of those things you need to do, right? Now pay attention here. There are many ways you can trade from those zones. There are many ways you can trade from those zones. Number one, you can look for long wicks. You can look for long wicks rejecting the zone. That will give you potential setup. Let's go back and see. Now, long wicks. Do you see long wicks here? This is a long wick candle. I'll give you. This is a long wick candle here. All right? Market reversed after that. This is another long wick candle and the market is reversing. This is a long wick at the zone. Market's falling. All right? This is a long wick. Okay, maybe the zone had not been created, but the zone was created here. There is a long wick here. Remember, this is a support zone created from here. These are long wicks, 3 weeks, long wicks. Market is reversing. Even when market came back to this support zone, long wicks, you see them, all right? So that's how you can consider some of the options you can trade from here, okay? So you can take rejections. If a candle closes with a long wick at the exact one of the lines, remember this is a zone, one of the lines or even inside the zone, you'd be able to consider whether it's a valid setup or not. For example, if I look at this candle closing right on this line, which was a swing high, broken, now becoming like a support. This is a resistance, now is a support. The candle closes right on that level with a long rejection wick. You see, next 1, 2, 3 candles go up, all right? Now, look at this other candle. Let me give you another example. If market, you were considering here, market again closes at the zone, right on the upper line of the zone, next candle goes up. There's a rejection, you saw a wick. There's a wick there. Look at this. After market breaks down, market broke up, broke down. Now, do you see this long wick rejection at the top? You see the next candle at least goes down. Then the next rejection does not work. Okay, you understand when market goes back to the same level very fast without some long reversal, then it means the level is likely to be broken. At least that's a different concept. Now you see again here, market is closing at the zone or at the level. This is a complete zone. There are no wicks. So market goes back up. So you can trade rejections. That's what I'm saying. You can trade long wick rejections at those zones. All right. Now, the next one you can consider are reversal candlesticks. You can identify reversal candlesticks on that zone, any of those zones. Let's see an example, okay? Let's see examples. Now, if you look at this candle, let me give you an example of a setup you can take. Look at this. You drew your zone from here. When the market came back to the zone, what kind of candle is this? In Forex, this could be called a bullish engulfing. Otherwise, it's still called an outside bar, something like that. It's a bullish reversal signal, reversal candlestick pattern, and should be taken at a support area. It's working. Okay. Now, this is also another support area. All right. This is a support area. Market comes back to this area. What kind of signal do you see? Okay. It gives you something like a morning star. I don't like this candle itself. This candle, this green candle. So it's not the kind of candle I want to consider bullish, because the long wick on top, long wick below, it's not a very good signal. If I were to ignore that, I would look for a better signal. What is the better signal? So it's a fake out, market goes back up, market closes in the zone, and then we have another outside bar. Okay. But now this would not be very useful because it has also broken another level. So consider that as invalid for now. Now look at this. This is a resistance zone. Once broken and the market is coming from above, it's a support zone. Look at this pattern here. Morning star on the zone. Market's flying back up. Right? Now, market came back again to the same zone. Morning star. Do you see market flying back up? This is resistance zone drawn from your fractal highs. Do you see this pattern here? Okay. 1, 2, 3, 4, 5. This could be like an evening star if you consider all the candles mixed together, or you can consider this one as a bearish outside bar or bearish engulfing. Do you see market reversing? Right? So this, you can trade patterns. You can trade patterns from these zones as well. Which are some of the other signals you could consider taking from this zone? Let's see. Okay, I want to look at as many as possible. Then you can also consider divergence. Divergence. Now, for divergences, I will not cover that for now. You would want to consider adding an oscillator like RSI, so that when RSI is making a higher high and the market is making same high, you can possibly consider bullish reversal. Or as market is, you have drawn the zone, market is coming down here, making a lower low. In that case, RSI could be making a higher low. So there has to be a difference. One, either the indicator is going up and the market's going down, or the indicator is going down, market's going up. I think you can check, there's a video I did on divergences. All right, there's a video I did on divergences. You can check it in the channel and you'll be able to learn from there. Or if you really think I need to cover that together with these fractal highs and lows, these zones, then I can do another video, but you put that in the comment section. So next is, you can trade with volume signals. You can use volume signals. We'll look at volume signals, and I'll show you examples here. Okay, volume signals. I think it's in the next slide. For example, you want to see how market comes back to the zone. When market comes back to the zone, what we expect is volume to either increase, meaning the level is very strong, market's rejecting it, or decrease, meaning market's weak. For example, if you look at this rejection here, I don't know if I can get a straight line. That is this. The volume is increasing, but there's a very long wick. This resistance, remember, this is a very long wick, and the long wick means rejection from sellers. The volume is increasing significantly compared to previous candles, meaning the sellers actually entered. It's a green candle, but sellers entered from the top, all right? That is causing the market to reverse like this. So you can use volume in that manner. Similarly, you can use volume to trade things like anomalies when market's coming back to the chart. Look at this. Look at these candles. I don't know if it's this one or this one. I don't know that I'm drawing that right, but look at this. I don't know that I can get a perfect example here to illustrate this, but I can do that, no problem. Look at this candle and look at the next candle, these two candles, okay? Look at those two candles. This is a very big candle with this kind of volume. This is a very tiny candle. Look at the body, very small. with a very almost the same volume as the previous candle. That's what we call anomaly. Anomaly at support and resistance or demand and supply areas causes a reversal, and you see that happening. Okay, so you can use volume. There are many concepts around volume. Maybe I can do them if there's a request to cover volume as well. So before we go to this action, let's look at some more signals you could take. You can consider breakouts. Consider breakouts. Okay, breakouts. When market breaks a zone, what do you do? So you have drawn your zone, but market breaks it. Like now, this is a zone you drew here, but this candle has broken above the zone. So you can consider going for a breakout. There are concepts around breakouts. Okay. Let's go back to where we had these many fractals. I'll show you several cases of breakouts here. Let me show you. So you see, this was a zone. This was a resistance zone. It was broken. So if you have other ways of filtering breakouts and you know this is a strong breakout, market will continue going up. And indeed, you can see it's a very strong candle, strong bullish candle breaking from this range. So there's a chance that market will continue. Okay, so there are people who trade breakouts like that. Again, there's a breakout here, but this is a fake breakout. Market just that. So that's the danger with breakouts. You have to be very careful. Many breakouts fail. So you see a breakout, market comes back, breakout, market comes back, breakout, markets come. So you need to find a way of trading and refining your breakout entries. But yes, you can trade breakouts as well. Those are potential signals you can do at these zones. Now, what was the other one? You could trade breakouts with pullback. So again, this is now a scenario where you don't trade the breakout immediately, but you see a breakout happen, you wait for market to come back. Okay. Now, if you consider, let me give you an example that would be like this. All right. Let me see if I can get a very good example for breakout illustration. Now, if this, you consider this one to be a zone, all right? Extend it. Market breaks above the zone, pulls back. And there was another zone here, I think. So there are several zones actually here. There are several zones combined together. So market broke above and came back to this. This is what we call a pullback. Breakout, pullback. After the pullback, what did you see? You pick your signal from, say, like this bullish engulfing candle. So the market broke out of the zone, going up, came back to the zone, and gave you a signal. So that's trading a pullback to a breakout area or a breakout zone. All right. So then we see the other way of trading could be anticipated rejection. So if you know, for example, that this zone is very powerful, market can't just penetrate and close inside, then you can time your entry that when a candle is coming into the zone, you place a trade and hope that you close below the zone. There are people who trade like that successfully, but you must have very strong zones, very, very strong zones. As a matter of fact, you can see this zone gave us a week, give us a week. Okay, this zone gave us a week. All right. So this zone also gave us a week here. This zone gave us a week here. So it's up to you to decide how to play with these rejections. Okay. You must time your entries properly. You must time your entries properly. As for me, a recommendation I would give for now is this. If you are going to trade rejections, make sure if you have done your support zone, try to place a trade below the zone. When a candle is breaking the entire zone, place a buy option here, a higher option, and hope the market will close back up. All right? You can see that. You can see that. Let it first break the zone. Okay? You can see that here. When trying to break the zone, you place a trade. All right. It's not breaking. This one is breaking the upper zone, not this one. All right. No problem. So at least that's one way you could consider trading those breakouts. Maybe I can do more videos on each of these concepts as we move on. No problem. So what was the other way of trading? Here you can use time. Certain hours of the day are known for reversals or for ranging. I will not cover that for now. Chart patterns. You can look for chart patterns on this. When market comes back to the zone, you can look for chart patterns. Things like rectangles, double bottoms, double tops, you know, head and shoulders pattern. You can look for these kind of things. Let's see whether we can identify one here quickly, then to illustrate with. If I am looking at this chart, do I see a specific pattern? Okay. All right. Let me see if I can see. There could be many, but for binary again, you need to be a bit selective. You don't want to trade everything. Well, I can see a rectangle here. A rectangle here, right? What people call a box. So market's trading within a range, okay? When market's trading within a range and the breaks above the range, wait for a pullback to the box and then go up, right? So if you are looking at this one, market's coming down, pulling back up, coming down to the same area, pulling back up, this would give you the neckline of a double bottom. But then you can place a trade from the breakout here. So there are many ways you could trade this. You could trade triangles, okay? Ascending, descending, etc. You can trade trend lines, trend line breaks. Like now, this is a trend line going downwards. After market bounces here, breaks the trend line, you can continue going up. That's one option, okay? You can also see this one was like a wedge. After we break this one, you can consider going up or wait for a pullback. So you can define your strategies around those. But I'm just telling you, you can trade from these swing highs and swing lows in very many ways. The other way would be gaps, okay? When a market gaps from a zone, it's a very powerful signal. When a market comes to the zone and gaps up or gaps down, it's a powerful signal. Are there gaps here? Let me see whether I can spot a gap. Because a gap tells you change of sentiment, here you can see this candle closes here, the next candle gaps down, and then closes up, meaning buyers are very strong, okay? Now look at this. This one rejects this zone, this red candle. The next one gaps up and goes bullish. That can also give you an indication that buyers are very strong. Let me see at resistance. Yes, here. This bullish candle closes up. The red candle here opens below and then goes down. Change of entry point, some people call it so. So gaps can also be very good signals you can trade from when they occur around these zones, okay? What more? I see we have momentum loss, momentum gain. You need to study how markets are approaching these zones. Let me give you that as the last thing we talk about for now. Markets coming down, big candle, smaller, longer wicks. Now completely lost momentum. Tiny candle, very tiny candle at a zone is an indication of loss of momentum. The bears, the sellers have lost power. And because we are at a support area where buyers are supposed to make an entry, you could expect them to enter. Again, look at this. Market starts reversing back, strong candle, small candle in the zone, loss of momentum, okay? That's one of the things you can consider. Look at this. Strong buyers, weak in the zone, loss of momentum, right? Market. So whenever there is loss of momentum as you approach a resistance area, expect sellers to enter. If there's loss of momentum as you come to support, expect buyers to enter. Loss of momentum is seen in candles decreasing in size and the wicks becoming longer. Momentum gain means the opposite. Like now, as market is going up, small, bigger, very big, all right? This increasing momentum. If there was a resistance here, please don't try to trade a reversal. Momentum gain like this can break a level. So we only reverse from these levels or zones if momentum is decreasing. Smaller candles, longer wicks. Okay. So those are some of the possible ways you could consider trading from these zones. And now I have 3 things to ask of you. Number 1, please drop a comment below the video. Say something. If you liked it, what you didn't like, just say it in a manner that it can help me improve on the next video. All right. If there's a topic you really want me to cover, you really want me to cover so much, comment and say, suggest a topic. All right. I also ask you to join our Telegram group. Just search Binary Winners Club. The link is also here. You can type it on your browser. It will take you there. Or you can pick the name Binary Winners Club and search it on Telegram. I also ask again, if you're not subscribed to our YouTube channel, please do that now. Just hit that subscribe button. Also remember to hit the notification bell. That way, if I upload a new video, you will be instantly notified that there is new content uploaded on our channel so that you can go and watch. Do remember, we exist also as Binary Winners Club on Facebook, Telegram, and YouTube. That's our brand name. Thank you so much for watching and staying until this very end. Wait for the next video in the next 2 or so days. Bye-bye.